Hi guys, and welcome to our weekly analysis video. So instead of uploading last night, guys, something came up beyond my control, so I didn't manage to do the video on Monday. That's why I'm doing it today, early Tuesday morning. So with that said, it's going to be more of a general focused in relation to where markets are likely to trade to. Now, there's things that you need to take note of, especially this week, guys. You need to be very careful in the markets because there's forces behind the calendar that are going to be popping up here and there, and these forces are going to really affect the forex market big time, right? So, as we have seen yesterday and early Asian session today, the dollar has really maintained its rally. Like I said earlier on last week, I think on Saturday or Friday, that once dollar breaks above 107, yeah, the bullish momentum could be relentless going to the upside. So we have seen that continue during the Asian session early this morning, and heading into into the European session, just around maybe 30 an hour from now. I think this is going to continue. This move to the upside on dollar is really going to continue. So I'm just going to switch to my platform here quickly. So this is the analysis which we did last week in regards to dollar, where I emphasized that I am bearish on dollar from 106, between 106 and 106.85 and 106.80, 93. So any breach above those levels would have been bullish for the dollar, and that's exactly what happened. Me, I was hunting for short positions. So if you go to a lower time frame like H4, you clearly see the break above. So with that said, we have seen dollar rally all the way. It's been breached this premium area here in the form of a daily bearish order block, and as it is right now, price is being drawn to this high. Okay. The yearly high for dollar coming in at 109. Let's see, let's get a proper price. Talking of 109, 135. Nothing is going to stop dollar to trade above that price point. So we are definitely going to see a new high for the year 2022. Probably, okay, let me go to trading view because MT5 does not have any other. And most probably, you see, it will be a multi-year high. Okay, in the past 2 decades, we'll be creating a multi-year high in the past 2 decades, and also confirming an uptrend originating from all the way up. We are going to create a multi-year high on dollar index. Now, where do we anticipate dollar to trade to, especially for this coming week? Once it breaches 109, 138, you need to take note of price action there, and I'm pretty sure it's going to happen as we head into New York session today or tomorrow. Then what is the reason of this rally? You see, there's 2 things in play, and those 2 things in play, you're not going to see them on the calendar. You see, the resilience that we are seeing from dollar, it's not like from economic activity in the United States. No, it's not. Right? Number one, last week, Thursday and Friday, we had Powell's juniors reiterating the Fed's stand on an aggressive rate hike, and that has been priced in now on the market by the price action of Friday and Monday, and we're likely to see that continue today and tomorrow, or even the rest of the week. You see, because whatever those 2 guys who were speaking on Thursday and Friday, you can refer to the calendar, guys. You see, there's Fed official speaking. I think just around New York lunchtime, those guys, they reiterated an aggressive stance. Why are they doing that? You see, this is what you need to understand as a trader. Number one, the reason is probably they're not expecting inflation to have peaked, right? Which is what I also anticipate. Say, guys, this inflation number that came here, it might be just temporary, but that's that we wait to see that until the 13th of September. But from those guys, the economic bosses, I think they really don't think it's inflation has really peaked. That's why they want to really be aggressive on their rate hikes, because they don't want to be caught on the offside again, like what they've already been the past 6 months. Number two, right? The fact that Russia is halting its natural gas supplies to Europe, right, is another contributing factor to a strong dollar, in the sense that, in the sense of it being a what, a safe haven. You see, this Nord Stream 1 pipeline is now being used as an economic war tool by Russia. Because Russia knows that by halting the natural gas supplies, they're putting pressure on Europe's energy supplies, and that in itself is going to disrupt a whole lot of things in the Eurozone. And remember, they're approaching their winter months, huh? And that could be very bad in terms of business activity. That's why you're seeing huge weakness in Europe. This could really get even worse. You see, on Euro, we're really talking of probably reaching all these levels here in terms of price action. We're really talking of uh, when did price break above here? Let me just get a proper pricing. We're talking of just under 0.95. You see, 0.95, 0.9450. Euro can really get to those levels towards the winter time or during the winter zone in Euro. So those two things, it's not like you are gonna see them on the calendar. See, because you know that the Fed officials are gonna be reiterating their aggressiveness. But now, once we have that information, now we've got that data, right? We've got a proper thinking of what they expect to do in the market. So expect dollar to create another high. And with Powell speaking on Thursday, right? With Powell speaking on Thursday, I think most investors, they are really looking to have dollar from a most investors are looking to really have to put their funds in dollar as a safe haven currency. And with the Jackson Hole Symposium on Thursday, I can only see Powell uh, reiterating what his other partners or his other companions at the Federal Reserve have been saying last week. I don't see him going the other way around. So expect dollar to continue its rally. So then how are you going to trade, right? The way you're going to approach this now is a hawkish Federal Reserve during the Jackson Hole Symposium, right? I think they're really going to maintain their hawkish message that we have seen most officials highlighting last week. So it doesn't hurt to be bullish on dollar, though you might need to be just careful because we always refer to as we need to avoid market tops and bottoms, and right now we are really at the top of a market, then dollar, and we are really at the bottom of a market in terms of Euro USD. So you really need to be careful the way you approach uh, the markets. So as for Euro USD today, we've got some quite fundamentals coming through, like around 9:30, the German PMIs, and we also have we've got German PMI, service PMI, and manufacturing PMIs. Now, what are these going to do in terms of the Eurozone, right? What are these fundamentals going to tell us in terms of the Euro, right? So with that in mind, right, with the PMIs in mind, they are really going to show us how far the Euro is really going in terms of their economic policies, right? We are really going to see these PMI readings. They are going to show us a bit of clarity on the growth trajectory for the respective economies. That is to say, we've got PMIs for Euro, we've got PMIs for the pound. You can refer to the calendar. They're going really to show us what exactly to anticipate in terms of the two economies. With that now, we've got ECB on the calendar also on Thursday. And I really think as much as they want to be hawkish, as much as they're going to sound hawkish, Euro is going to really flash to the downside, right? But if it's a case that the PMIs we are getting are going to be positive, and then you get a hawkish ECB on Thursday, we could we could likely see a turning point or a tipping point, or we could see the same price action which we saw previously when dollar traded below parity. So you could see this type of price action, right? You could see it here, right? And that in itself has to come about from a hawkish ECB, right? So if we do get a hawkish ECB, and we already have Federal Reserve sounding hawkish on their aggressiveness of monetary policy, then what do you think? Who do you think is going to win? Obviously, the dollar is holding firmer ground, but with the dollar holding firmer ground already, they priced in hawkish uh, monetary policy. So it's really going to be very hard to come with the trades heading into the Jackson Hole symposium. So I advise you guys to just be very careful on the way you approach the markets. Yes, there's nothing wrong with trading with the trend, but only on negative news for the euro. Let's say those PMIs from Germany come out negative, right? We get negative German PMIs. Nothing wrong in selling Euro USD because you're expecting a continuation to the downside. You see, that's how you have to approach it now from now on. You have to approach it in a way. Okay, if we do get negative PMIs from Germany and also from pound, there's nothing wrong in shorting Euro USD. But if it's the other way around now, I'm sure you've seen what happened on Friday. We had positive news for the pound. The Friday or Thursday, I can't remember. We had positive news for the pound. But as much as we could go long, right? I even gave that signal and it didn't work out, right? Our stop loss was triggered. As much as we got those positive news on pound, it didn't respect that. If I got pound USD, I think it's this price action here. I'm not sure which one between the two. Yeah, I think it's this one here. As much as we got that, let me see, yeah, they went long up here, but our stop loss was traded through. We lost almost like how many pips is that? I cannot see pips. So as much as there was positive news for the pound, right? It didn't find any support whatsoever, right? And much market actually continued going to the downside. So when you get positive news in a market which is bearish like this, it's really ideal to be very careful how you approach those markets. So yeah, it was just a general forecast, guys, to reiterate the strong dollar, and you can already see dollar is now really trying to trade above 109.1 with USD JPY 138. This level here, expect USD JPY to also push to the upside in the coming sessions. USD JPY must push to the upside. So yeah, that's pretty much for today. And I hope you guys make well-informed decisions on your tradings there. You don't just trade without proper understanding of what is going on in the markets. So yeah, it was just a short uh, out of the box market lookout, market focused, and I cannot really give proper price points this week where we need to focus on, because we could be seeing a market turning to the downside in dollar, or a proper continuation all the way to 110 and 111. So yeah, with that guys, I wish you good luck and happy trading. Thank you.